Dr. Michael, what's your forecast for institutional investors, coming into Dubai overall? How do you see it, for the next 2-3 years?
Yeah, you don't need to go far. You look around us here where we are, you see the types of assets that are in the major free zone. So, Dubai Internet City,
You've got the Visa building.
You've got Visa, you've got, Google, you've got Sweden, you've got these structures. I mean, the Edge building is an example of something that's been traded as by an institution. So there's an opportunity, there's an exit plan for those buildings if that was something that governments wanted to do. And I think there would be appeal because around us you've got businesses taking on longer leases, staying here longer. They're strong assets. They're LEED Gold, LEED Platinum buildings. They tick all those boxes that we've discussed. So I think as the development cycle starts to build these types of products, then it will attract. It's a good exit plan for a building, and we've got that example with ICD Brookfield. Exactly. A partnership between Brookfield and ICD developed a fantastic tower, sort of one of a kind tower.
It's an icon in the IFC.
Leased it up through the hardest commercial market during COVID, but it's fully leased. Rental growth has been significant during that period of time, and the exit plan, as we start to hear in news and media, is different funds internationally are saying we want to buy a stake in that, or we want to acquire a stake of that building. So it's testament to the opportunities that exist. There is interest for the right product.
I think there's a lot of buzz. If I get it correctly, there's a lot of buzz happening as we speak.
Yeah, and I think the development cycle that we're seeing now will translate into more institutional. If it's planned as it is being planned to attract from the different levels, from the developer led through government initiatives, government incentives, it will drive. The strategy is very clear, and I think the maturity of Dubai will be supporting that economic growth, which then trickles down into the residential sector. So, the commercial sector is the lifeblood of a residential market. So they work in tandem with each other.
So, and that was another question, that it will have a ripple effect.
Yes.
More commercial means more residential.
Yeah,
so we'll see a ripple
more confidence generally in the market, less priced in risk. The risk is less. We've got longer time series now to work with, to draw decisions on. We've got legal structures that are clearer than they were historically. It all gives more confidence, and it compresses the risk that I then factor in when I buy. So we're seeing that in, as I said, in commercial from 9 to 6, residential equally. Post GFC it was probably 10% yields. Now you're in the 5-6% yields for residential assets as well. So people have more confidence in buying here. There's longer term plans for the investments, and if that's supported by good financing, bank financing and so on, then that will also support the evolution of prices and price growth in the future. You've got to have a strong finance system to support the acquisitions and decisions of these investors. Yeah.